One of the hottest areas and fastest growing areas of investing is ESG funds. But what are they, and are they worth it? Coming up. Welcome to the channel where we help you to learn fast so you can become a confident and successful investor. If that sounds interesting or good to you, hey, do consider subscribing. Would love to see you there. All right, let's talk a little bit about ESG funds. And are they good and are they worth it, right? So first off, ESG funds are like mutual funds and also exchange-traded funds. And ESG stands for environmental, social, and governance. So they're environmental, social, and governance funds, or ESG for short. Very similar to that, almost in some cases exactly the same, are what are called socially responsible investing, or SRI, or SRI funds. I tell you, it's investing, it's finance, so we got to have a lot of those little acronym things. So we got ESGs, SRIs, they're pretty interchangeable for our discussion today. One thing you might see with socially responsible investing, by the way, is they can be more exclusionary, where they won't invest in alcohol and tobacco type companies and be more exclusionary. But the whole idea of an ESG fund, environmental social governance, is that they're excluding things or including only certain other things. We're going to learn all about that later in the video, about what's being included and what's being excluded. So let's learn a little bit more about ESG funds and take a little deep look into them and how are they rated and how does it all work. So first off, ESG, let's break it down. So E is environmental. And so environmental, of course, is conservation and protection of the natural environment. So this is looking at funds that are looking at companies that are more environmental stewards, that are not poisoning lakes and things like that, but they're actually concerned about the environment. So things around the environment, of course, include things like air emissions and air quality. Is a company that you might invest in, are they pumping out all sorts of smoke and stuff in the atmosphere that might be toxic? Energy use and conservation, natural resources, land use, waste management and water quality, and hazardous materials is very common too, especially like for energy companies or chemical companies, pharmaceutical companies, any company that's making things that uses hazardous materials. How are they handling all these things, from air quality to hazardous materials? Are they handling in a safe manner? Are they really responsible with it? Or are they just kind of polluting and a big polluter and not being good at it? So an ESG fund is specifically looking and say, we're not going to invest in companies in this mutual fund that is maybe not good stewards of the environment. And so for us as consumers of mutual funds who would invest in mutual funds, this is where people look at ESG funds. It's like, oh, I like that. I just have a whole hard time investing in companies, let's say, that are really bad for the environment and are on the news all the time too. So this is where an ESG fund looks at the E part, or environmental. Now the S part is social. So social is all about relationships the company has and people within the company, especially the executives and the leadership in the company, management, all down through. But it's all about the relationships with their employees, their suppliers that they work with, their clients or customers, and their communities, the broader communities. So that's that whole social component, right? So and all this is from that company perspective of whether you're going to invest in a company. So are they good social stewards too? Or do they have fair labor standards and how are their employee relations? Do they treat their employees well and their team members well? What is the production quality? Is it safe and is it good quality? Well, how's their impact on the local community? Are they helping the local community, or are they a detriment to the local community where they might have their headquarters, their factories, their plants, their locations, whatever it may be? Do they offer equal employment opportunity? Do they believe in diversity, for example, or are they very exclusionary on that? And looking at things of how they're treating their employees too, in terms of things like healthcare, education support, and housing services, or other types of benefits that they might be offering their employees. If there's companies that really fall down on these areas, they can get excluded from a fund that is looking at ESG, at environment, social, and governance. So if you feel that way too, if you're like, I don't want to invest in companies that treat their employees bad and treat their communities even worse, right? Then you might be like, oh, these ESG funds might be interesting. Let's look a little bit further at them now. So if we think about governance, this is about company governance. It might be related to interaction with the government, for example, or us as citizens, but also it's a big part is looking at how the company is led or governed. So it's the standards for company leadership, risks, controls, and shareholder rights, right? So that's looking at overall governance. And in this broad area, you're looking at their business practices. Are they an ethical company? Do they behave in an ethical manner as far as their governance and maybe their kind of whole strategy and stuff? Do they pay bribes to other countries, which is illegal? Do they, manipulate people or manipulate other companies? They might suppliers that they work with. Do they have ethical business practices? The big thing too right now is the board of directors, and that their board of directors is independent and they have diversity on the board. A lot of times in board of directors, even for very large companies, it's almost the board is handpicked by the CEO, to nominate people and get people on the board of directors. But the board of directors is actually the CEO's boss. They decide on what the CEO gets paid and whether to fire the CEO. It's a long process to fire a CEO, but they can do it, right? That's what the board does. Are they independent and can actually do that and manage the CEO, or is the CEO on top really managing them? A lot of times you'll see CEOs who are also the chairman of their boards. This is not right? It should be more independent than that. And the other part of that, of course, is diversity. A lot of boards were always, older white men, right? Let's be honest, right? So, but if you don't have that diversity of thought, whether it's a person of color or women or whatever it might be, you need to get beyond just old white men, speaking as an old white man. So governance is a big part of that. Also looks at things like voting rights, voting rights on the board of directors and voting rights for shareholders, is the voting, handled in a fair manner. And then executive pay and employee pay. That's another big hot topic right now, where we've had a real rise in executive pay at an astronomically fast rate, particularly when compared to the rise in employee wages. In fact, a lot of employee wages are not rising as fast as inflation. Inflation being the prices of goods. So you're paying more for goods like groceries, food, travel, whatever it might be, healthcare, whatever it might be, you might be paying more, but your salary's not keeping up to it, so that becomes a real problematic thing. But what's not a problem right now for executives, they're getting paid a lot, especially through things like stock options and other compensation. So how fair are they from a governance standpoint in terms of executive pay and employee pay? And they're just overall transparency. Is it a transparent company? Do they pay their taxes? Are they pay taxes at all? And how transparent are they as far as a company? So you can see this environmental, social, and governance. There can be some strict criteria around whether you're going to be included in a mutual fund that is offering this type of fund, and we're going to look closer at a couple funds to give you an idea, a little bit more detail on that. Now, you might be thinking, at this point, well, who decides? Well, who decides all this stuff? It seems pretty subjective. Who decides whether a company is a good environmental steward or teaches employees well? Is there a rating industry? Is there something that's independent that can rate stuff? Otherwise, it's just opinion. In fact, even with rating agencies, it can be still a little bit more opinion oriented. But there are actually rating agencies out there, ESG rating agencies, and there's many of them out there. If you just Google search at ESG rating agencies, you'll find a whole bunch of them. I've got some listed in the description below, so take a look at that. So take a look at that below to get you started there. But there are really two main ones. Two big ones I would kind of direct your attention to. One is Msci Esg Ratings. That's what it's called, Msci Esg Ratings. And they have over 14,000 stock and fixed income being bond issuers. So companies can issue bonds too, as well as issuing stock. So they're looking at 14,000 companies, and they're providing a rating around, an ESG rating based on these three big buckets, and then whether they're a good ESG company and should be included, or whether maybe they should be excluded. So it's an independent rating. Another good one is Sustainalytics. So it's called Sustainalytics ESG Risk Ratings. And they rate about 20,000 companies, and it's a little bit more global, over 172 countries. So if you're looking at countries or companies, especially outside the US, you might want to check out Sustainalytics. Again, all the links are below as far as how that would go. But these companies are independent of all the companies, the rating agencies. But again, look at those rating agencies and look at their criteria and how they're evaluated. But that's an independent source to help mutual funds and help you and I to evaluate ESG funds. All right, so far we know what is an ESG fund. We know there's rating agencies. But now we got to look at is it worth it, and how do companies, how do these mutual funds, how do they kind of package it together? What's excluded, what's included? So let's take a look at some screencasts to take a look at that. Okay, I'm over here at investor.vanguard.com/investing/ESG. Links are all in the description below, so take a look at that. And I'm just using Vanguard as an example because they have some nice information on their ESG page. And they have a really nice chart or graph to show you how much investing is going on in ESGs based on research that they did. And I think that's very important and helpful for us that we're going to take a look at. So check out their page, but there's other companies have their own versions of these types of things. You can certainly check them out. I'm not endorsing Vanguard in any way. So you can see here, this is their ESG investing page here. Discover funds that reflect what matters most to you. Look at this gentleman here, he's amongst all the trees reflecting on ESG funds, I guess. So if we go on down, like I said, they have a lot of good information here, and we're going to come back to this little part here in a moment, but I want to talk to you about this chart here, which is basically looking at ESG investing over time, right? How much money is going into these various ESG funds, not just the Vanguard funds, for example. And this is a chart showing money flowing in, or assets under management in billions. So AUM is assets under management, or money coming in to or going out. It's a net amount, going into these types of funds. And they happen to be looking at the United States, for their research, and they looked at 600 different funds. So you're getting, and ETFs. So you're getting a lot of good information here as far as a lot of diversification, a lot of different companies and diversification as far as types of funds. This is not just Vanguard looking at themselves. They're looking at a broader thing. And what do we see here? You see 2010, there were about $60 billion of assets under management in these ESG funds, right? And it kind of went down a little bit and kind of, starts to kind of, navigate up and down a little bit, and then starts to pick up around 2015, right? So more money's coming into ESG funds, and I'm going to tell you why that's important here in a moment and why that matters to us. That's more than just a nice graph. So if we then see about 2015, things start changing, right? People become more aware of ESG funds, that's an alternative, and that they want to invest in. This starts really picking up. It starts to kind of flatten out a little bit, and then what happens in 2018, and this is going back through 2020 as far as their data, it starts to spike, right? It's really spiking here, and lots of money is coming into these funds. We're up to over about 180 billion right now of assets under management. So money is coming to these funds, and this is probably going to just continue on, my opinion, but I think this is might bounce around a little bit, but I think this is going to continue on. As people are more aware and want and choose to invest in ESG funds, they're voting, basically what they're investing in through their conscience, through environment, social, and governance funds is what they're doing here. So you can see this is rising up. So why is this important to us as investors? Well, when you have an ESG fund, some stocks are included in those funds and some stocks are excluded from those funds. And so the stock market is all about supply and demand, right? So if you have stocks that are not being considered in some of these big mutual funds and big mutual fund companies like Vanguard and Fidelity and others, less people are interested in them or buying them because of their challenges and their poor ratings maybe from ESG rating industries, and these big mutual funds aren't buying them. That means their stock price is not going to maybe appreciate as well as stocks where big companies are funding and buying these companies to put into their ESG funds is going to kind of be a little bit of a tailwind, like a ship has with sails has a tailwind to help it push it faster. That's the same thing too. So whenever you're looking at things around in the investment world, if you're starting to see some definite trends, then it's always a good helping thing. It's not necessarily, a yes or no thing, or it's the end all to be all. I'm not saying invest in ESG because, oh my gosh, you look at all that money coming in. There's money coming into funds all the time, and its general directory is up anyways. I'm just saying right now that we're seeing a spike in ESG funds, a spike in interest into it, and thus, for people who own those funds, there's an opportunity for those to keep rising. So that's one thing to look at for the chart aspect. Another thing looking back here too, let me go back up here, looking at Discover Vanguard's lineup. Again, I'm not endorsing Vanguard's lineup, but what I want you to see and discover here actually is they have these different funds that are ESG funds, so there's select ones or global or different ones, whether it's a mutual fund or exchange rate fund. And then what the style is and geographic coverage on it. But you can see here where it's a strategy, you have some that are integrated funds and some that are exclusionary funds. So this is important where we want to look at that. So there's integrated and exclusionary. So what does that mean? We're going to click on that. And we're going to come down here, to where it talks about portfolio screening and whether it's exclusionary fund or an inclusionary fund, and because they're different. So exclusionary ESG funds, it means they're going to exclude different or underweight, so you might still get some bad guys, but they're going to underweight or exclude certain sectors, countries, or securities. And they use an example like they're going to rule out companies that manufacture or sell tobacco or guns. So it's excluding that. So if they say we're going to exclude tobacco, you're not going to get Philip Morris or Altria actually now. You're not going to get a tobacco company. If it's something that's considered an inclusionary fund, it's going to basically invest in sectors of companies with higher ESG ratings than their industry peers. So what that means is, and let's use the tobacco, if they might invest in tobacco, they're not going to exclude the entire industry. They're just going to, they're basically going to invest in some tobacco companies that do better with ESG ratings. Doesn't mean they have good ESG ratings, just means that they're allowing themselves to invest in that. That may or may not be something that you want to do. So their example here below this, a mining company that's inherently risky environmentally, but ranks high in managing the environmental impacts on its products and services, at least compared to its peers or its competitors. So you might say, I don't want to invest in a risk environmental and mining company at all. So that's where you might be looking at something more exclusionary. So when you're looking at ESG funds, look and see if they're exclusionary or inclusionary. And you can see in Vanguard's lineup, this ESG Select Stock Fund is integrated and it's more inclusionary versus these others which are exclusionary. And then you also want to look as far as what's inside the different funds themselves. So I could go look at, let's say, this particular fund here, and you can start looking at, and it'll be listed different ways. Maybe it's under portfolio and management, like on Vanguard. Others usually will see the word holdings, but you can click on that and start scrolling down and looking to see what they're investing in, by region, number of stocks, all that kind of stuff. But if you start looking at the top 10 holdings, you can get a feel for, are these companies that, meet your definition of what might be, a good ESG company? It should. And a lot of times you can also see the overall portfolio holdings if you click on that. And they'll break it down by, different sectors and different types of countries too, possibly. So different ways of looking at it as far as looking at, let's say, the top 10 holdings, and looking at, is it what you want to invest in terms of, is it meeting your personal ESG criteria? So let's take a look too at how that might compare versus, let's say, the broader index. If you weren't actually using ESG, you just looked at a broad index like the S&P 500. So I'm going to jump over here to finance@yahoo.com. We can see let's keep looking at that VEIGX, that ESG Select Fund Investor Shares thing we were looking at Vanguard there as an example for an ESG fund. And I want to compare it now to the broader market. So let's say I click on the chart here, and you can see how it's done since, let's see how we're doing this. So this is on 1 week intervals. Let's do this on a monthly interval. So you can see this is a month by year going back in, back to, what is this, 2019. So it's not a very long-term fund. It's been around since June of 2019. And you can see the trajectory is up. That's good. You can see right here what happened here in 2020, early 2020, COVID-19, where everything just plunged, right? So this did as well too. But so you can see, well, okay, it's up. It's up. That's great looking at this time frame. But let's compare it. Let's say, well, how does this do versus, let's say, the broader market? So I'm going to look at the Vanguard S&P 500 fund, ETF, symbol is VOO, and see how it compared. And let's change our color on this so it stands out. So we'll make this one kind of orangish, maybe a little bolder so it stands out. Okay. So as you can see, how they kind of track along each other. They both went down during COVID-19 and they both have been up well, right? So if I would have bought this back in June or July of 2019 on the VEIGX, if I would have bought the ESG fund, I would have made 44.55%. That's pretty good, right? That's over this time period, especially since we had a big dip there with COVID. Now, if I had bought the broader stock market, let's say it's not the total stock market, but the 500 largest USA companies, as an example, I would be at 53.31%, so better, a little better, some would say quite a bit better. So this doesn't mean that ESG funds are always going to underperform the market, not at all. It just means that if you are deciding to go this way, that you're going to forego some potential because maybe sometimes in the market, tobacco companies, defense companies, companies that you might not like might do well. So a lot of people don't like Facebook, for example, might do well, and that helps raise the overall broader S&P 500 fund. So, and sometimes I could see where the ESG funds would actually do better. And certainly the long-term trends with that upward growth that we're looking at as far as money coming in gives it a little bit of a tailwind too. So with that, just something to consider that when you're investing in an ESG fund, compare it to whether you might want to invest in a broader index fund that might not meet your social investing values, as socially responsible investing values that it has. Doesn't mean it's right or wrong. You're the investor. You get to choose. Just something to consider. Well, there you have it. You learned a whole bunch about ESG funds, right? So now you can decide, is an ESG fund right for you, and how to really look at them and start evaluating them. So I hope you found this video valuable. If you did, hit that like button, and certainly would love it if you'd subscribe to the channel too, if you'd like to learn more about investing in a wide variety of areas. Check out all sorts of information below too as well. So with that, I wish you all the best in your investing journey.